Good morning. Hello, Malaysia. I am Eli Broverman, a Fintech founder, advisor, and investor. I live in New York City, so it is a great delight to be here in KL with all of you. I've come a long way. I've banked about 10,000 miles into my travel bank, and I'm so excited to learn about all of the fintech activity that's occurring here in KL and around Southeast Asia. People at home are so excited to learn about the activity here, and we've been talking quite a bit about it in the past few months. I work with a wide number of fintech companies back home in the States, but I am perhaps best known for Betterment, the first company that I founded. And I think I should take a few minutes to tell you a little bit about it if you're not familiar with Betterment. So Betterment is the leading smart money manager in the US. It's built to help make our customers' financial lives better. We help our customers with their near-term money needs, earning them the highest yield in the market on their cash and keeping their money available for their day-to-day spending needs. And then we help our customers plan for their long-term financial futures. We ask them what their financial goals are, and then we create investment portfolios for those goals. They're customized, and we manage them over time for them. We're really trying to optimize everybody's expected returns so that they're set up for financial success into their futures. We make it easy and accessible for investors to be smart about their money. And we automate all these processes so that we can offer our services at an affordable price and provide those services at scale. We were indeed the first robo-advisor in the world. As you might imagine, we started small when we launched Betterment in 2010. We had just a few team members. We worked from a single-room office. The product was a simplified version of what it is today. And our growth was, well, it was slow. We struggled out of the gates. In the first year, we went from nothing under management to $10 million under management. And we told ourselves this was quite an accomplishment, but it was really a long way off from where we needed to be. We were having a hard time hiring. We were having a hard time building more product. We were having a hard time raising capital. In short, we were just trying to stay afloat. Now, today, Betterment is a team of 200+ team members who are passionate about our work at Betterment, and they are building products more and more rapidly. They are reaching more customers. We have 400,000 customers who are now part of Betterment, and we manage over $19 billion for those customers. We do it on an individual basis, and we work with employers to manage their 401k, their retirement plans in the US. And we've fueled our growth with $175 million of venture capital funding. The growth we've achieved in our first year at Betterment, we now outdo in a single day. And as we grow, we are acquiring new customers faster and faster. Those customers give us more insights and more data to power innovation, and we're impacting them more deeply. We create so much more value today for our customers at Betterment than we did even just a few years ago. Betterment is really a company that is achieving large scale. So what does it mean for a company to scale? And why does it matter? Scale is really the phenomenon of generating increasing output, leading to bigger impact. That is, as you add more people and you add more technology to an organization, the output of the company increases accordingly. And with the right outputs, the company makes a deeper impact on a larger group of customers. And we are in the midst of a boom in scale in fintech. The growth of Betterment, it didn't happen in a vacuum. It coincided with the birth and growth of fintech as a space. The term fintech wasn't even in popular usage when we began working on Betterment. And we really began working on Betterment way back in 2008. We were an outlier in tech. We were going after the finance space with its heavy barriers to entry and its scary regulatory requirements. We weren't the only ones working on finance startups 10 years ago, but we were one of the few, and those who were doing it in silos, in isolation from one another. And now, there are nearly 50 fintech unicorns across the globe. It's been staggering growth. And of course, as you study this map, here in Southeast Asia, we can't help but notice that the preponderance of activity has come out of the United States. And there are no companies in Southeast Asia that have reached fintech unicorn status. However, the region is brimming with activity. Look at the number of fintech deals in the US and in Southeast Asia. That's a tremendous number in both markets. And the gap is really quite narrow. If you had told us back in 2010, when we first raised capital at Betterment, that there would be 82 companies working in the fintech space that would be funded in a single year, our minds would have been blown. We wouldn't have believed that. So we see market conditions in Southeast Asia that remind me of where the US was not 10 years ago, but just a few years ago. When I was in Singapore over the summer, I was told that 5 years ago, there were just a handful, maybe 5 fintech companies in Singapore. And today, there are 500. The pace of progress is truly impressive. Now, where there remains a big gap is in fintech companies reaching the later stages. That we're not yet seeing in Southeast Asia. We're on the cusp, but we're not quite there. And if you look again at the stats and you think about the implied deal size, the deals in the US are on average about 3 times larger than deals in Southeast Asia. It's an indicator of how mature the markets are and what stages the companies in Southeast Asia who are working in the fintech space are relative to at home in the US. So I'd love to talk about some of the factors that drive scale. And there are 4 of those today that I want to talk about. There's more, of course, but we only have so much time. And let's start by talking about timing. You know, when I look at a new company that I might get involved with or maybe start, I ask myself often 3 questions. Is this the right idea? Is this the right team? And is this the right time? And on that last question of timing, on a macro sense, this has really been a phenomenal time for fintech in the United States. Going back 10 years, we had a lot of pent-up demand for change. We had seen the internet create rapid disruption in many industries, but there was stagnation in finance. And then a trigger event. The financial crisis hit. And what happened there was that consumers were finally fed up with financial services as they had been. They were ready and demanding change, and entrepreneurs were energized to take advantage of that opportunity. The climate was right for democratizing finance. That organic catalyst really helped set off this boom in the West. Now here in Southeast Asia, we might find other forms of catalysts. Elsewhere around the world, it might come in other forms. Perhaps the government-backed initiatives behind digital banking in Hong Kong and Singapore that we're now hearing about will be one of those catalyzing events. I'm excited to watch what happens in those spaces. Next, I think about network, community, or the lack of community. It's so important to outcomes for fintech companies. The challenges in fintech are large and unique. Inertia, regulation, security. These play an outsized role in fintech. Builders of fintech companies need a support network of other builders. Without it, it's slow going, like our experience at Betterment. With community, we can share learnings, successes, missteps, technology, talent, all of which accelerate growth. Founders who have built fintech companies have been in the shoes of the founders coming after them. They're so important to helping new fintech founders, new builders with these daunting challenges. Even the mental moats are large. Founders ask themselves, why have things been the same for so long? Maybe they shouldn't change. Maybe they can't change. Do they have to continue to be this way? Am I allowed to build this company? Where do I get permission from? Lawyers and regulators have been here and will continue to be here as a key part of the support network. They were a key part of the support network for Betterment in our early days. But founders also need help on vision, pushing boundaries, conviction, the forms of encouragement that comes best from other founders. We've seen the network effect clearly take hold in the US. The ecosystem in New York City and Silicon Valley, it's now full of fintech companies. From the days where it was hard to find other people working on early stage financial services companies, today I bump into new companies every hour of every day. Community has been a big part of the scale story in the US. And an important note, I think, before I leave this topic, the network building has really been quite traditional. It's been offline. I meet founders and other builders at dinners, at events like this, at traditional offline networking opportunities. To make fintech global, I want to point out, to democratize financial services across the world, we need to unlock the next levels of network and community building within fintech. Now, about access. Access means many things: capital, talent, service providers, corporate partnership, regulators. Access to all of these resources are so important for scale. Now, we don't have time to dive in to every category here, so maybe let's just highlight the venture capital trends to illustrate further. We have had very desirable VC conditions in the US to support fintech over the past 10 years. Just as the fintech boom was getting ready to take flight in the US, we had in place already a mature VC industry, one that had 30 years of accumulated experience and knowledge. They weren't mature just in terms of dollars they had to put in play, but in terms of expertise in scaling tech companies of many types. That VC industry was also hungry for new opportunities. They had saturated opportunities in ad tech, in travel, and search, the less well-regulated spaces that were the first frontiers of internet disruption. US VCs were ready to take on bigger, harder challenges, especially those in more regulated spaces like fintech. Many did not fully understand the complexity of what they were investing in, but they were ready for the new challenge, and they brought relevant experience from other domains. Last, I want to touch briefly on market. The US has many natural advantages. We have one large uniform market, a relatively affluent customer base. Much of our commerce flows through large enterprise. And we have strong tech infrastructure, strong fintech infrastructure that keeps getting stronger and has improved immeasurably in recent years. That's been a big part of the growth story at Betterment and at other growing fintech companies. Elsewhere in the world, democratizing finance means tackling more fragmented markets. It may well mean more cross-border cooperation between regulators, and it may well mean putting more emphasis on joint ventures and alternative forms of distribution. This is an area we haven't done very well in the US. There's been many attempts at fintech and large corporate partnerships. There have been few success stories. But I remain optimistic that there is great potential for joint ventures in the US, and I'm particularly optimistic about that opportunity here in Southeast Asia. We want to continue proliferating all of the drivers that create advances in fintech and allow them to scale. And we want to do it on a global level. So as I conclude here, I want to make an announcement, a really exciting one. Here at SC by SC, we are now ready to launch the Treasury. The Treasury is a new initiative to build a global fintech community. I'm launching Treasury in conjunction with Jeff Cruttenden, who you heard about earlier, the founder of Acorns, and James Layfield, founder of Central Working Fintech Centers. The Treasury is about providing access to and among fintech founders, large financial institutions, and government regulators. Building the future of financial services, it's a daunting task. The Treasury is created to support the hardest challenges, to leverage the experience of founders and operators who have done it before, to allow people to build deep fintech. We want to connect builders to capital, to forward-thinking regulators, and to ambitious large institutions. You can visit treasuryfintech.com to learn more. And if you're a fintech entrepreneur or corporate innovator, I invite you to apply for membership. Scale is at the very essence of fintech. Financial needs are universal. There are no bigger markets than the financial services markets. Fintech is really about how we serve those needs and markets at scale. Achieving scale, it means fully realizing the vision to transform that is at the heart of a builder's ambition. Events such as SC by SC and institutions such as the Treasury, they have an increasingly critical role in unlocking scale in fintech. I am so looking forward to the exchange of ideas here over the next few days and to see it push us forward into the future of fintech.